Hi there, this is Bruce at Fleet Capital Management. It is Monday afternoon, the 27th day of January, 2025. It was a pretty bad day for the market, so I wanted to provide you with a very short video to show you some things that I'm seeing. Even though I need to say the video presentation is intended for educational purposes only, the discussion of any security is not a recommendation to purchase or sell the security. I'm always available. Bruce at Fleet Capital Management. Let's go over the charts. So this is a chart of the S&P 500. You can see these dashed lines, and then the solid green line in the middle is a form of a linear regression. The line in the middle is the mean, if you will, and then we've got two standard deviations above, two standard deviations below. At first glance, do you see any major problems on this chart? And the answer should be no. We are just continuing in this trajectory. We are kind of near and maybe a little bit lower than the center line of the mean. So I don't see any real problems, even though we had an absolutely horrendous day for the markets. If you zoom out, this is also a weekly chart. Things don't look that bad. If I expand my screen over so that you can see the exact same thing, but on a daily chart, it's been kind of sickening. And then today, yesterday or Friday, the market closed up here. And then today, it opened down here, way down, significantly lower. But even with that, there are a couple of very interesting things on this daily chart that I find comforting, if you will. The market, the S&P opened way down here and closed way up here, almost at its high. That is a pretty strong sign that there was a shock to the markets, but the bulls came in and pushed it back up. The second thing I see here is this blue line is the 20-day moving average. It never even broke below the 20-day moving average. We were significantly higher than the 20-day, and we lost a lot of ground, but it didn't even break below the 20-day moving average. So I'm not seeing anything that I am panicked about at all on the S&P 500. Let's go to the Qs. Now, the Qs are going to be worse because that's the technology sector for the most part. Here's the weekly chart on the Qs. Do you see anything on here that stands out that should shake your confidence or looks like the world ended today? I don't either. We're in this linear regression, which is a wonderful 45-degree kind of perfection linear regression. Here is today, because it's the beginning of this week. We're in the lower half of the linear regression. Fine. We're not even down at the bottom line. So I'm not seeing anything on this chart as well that is causing me any huge angst. But if I look at the daily chart of the NASDAQ, there are a couple of things, obviously, lots more volatility. And when you see that Friday the market closed here, opened down here, yeah, that's a big shock. I mean, the NASDAQ was down 3% today. That's a huge amount. But let's look for what the chart is telling us. We opened down here. We closed within the linear regression, just at the bottom. I see that as somewhat bullish, not as bullish as the S&P 500, because we closed right in the middle of the entirety of the range from high to low. Remember, the S&P closed very near the top of the range. So this chart is not as good looking as the S&P, but it's not horrendous. The price did close below both the 20 and the 50-day moving average. That's not a good sign. But again, it's still within the linear regression. The low, which is right here, is still significantly higher than the previous low, less than 2 weeks ago. So if you were to draw a little trend line right here, we still have higher lows. What's the definition of a bull market? Higher lows is the most important thing. Higher highs. Well, we didn't make a higher high, but we did make a higher low. Let's see if I can get this to draw for me. So we have what is a consolidation that is narrowing. When you have a consolidation like this that is narrowing, generally speaking, one of two things happens. We break lower to the downside of that consolidation, or we break higher. These two lines are far enough apart that we could just stay inside here for a little while. But the point is, even on a terrible day, and today I would say it was a pretty bad day, I'm not seeing absolutely horrible things. Now, there were some horrible things that happened to certain stocks. ANET. ANET was down 22%. This is one of our stocks. Now, here was our adjusted stop. And remember, I told you that we're not doing the live stops because if this had been a live stop, if this was, you probably would have been stopped out right about here because price opened and immediately ran down. And that would have been, in my opinion, a terrible place to get stopped out. Because if this was exaggerated, then price may start to come back up, climb back up tomorrow and the next day. Let's look at a couple of others. CLS was the worst. CLS closed down 28%. This was our adjusted stop. It completely skipped that stop. And if it was live, it would have stopped you out down here. Let's see, there was one more. NVIDIA. NVIDIA, again, everything jumped the stops, which means you would have gotten a much, much, much lower stop. And sometimes when we have an exaggerated market, it starts to snap back. And if you get stopped out at the very bottom, you miss any snapback. NVIDIA went all the way down, came back up somewhat to this level. Again, nothing great. It's clearly below the linear regression. And those were the three. There was one more, VIST. It had skipped the stop, came down here, and now it's up a little bit back inside the linear regression. So this one's not that bad. So we really had one, two, three. We had three stocks that were pretty terrible. And then the question is, well, what do we do about those stocks now? Well, that is the question. And based on our rules, if a price of a stock closes below our adjusted stop at the end of the day, then what we do is we put a live stop in about 1% below. And that's what I'm contemplating right now. I'm trying to figure out if that's the right thing to do right now. And I probably will do that. What I don't want to happen is for us to get stopped out at an exact bottom and miss the response. And the response is generally to a day like this, the market might open down tomorrow morning because there will be mutual funds that don't really settle until now after the market is closed. They have to process those trades first thing in the morning. That's why there's always dramatic volatility early in the morning. It's because all those mutual funds, they're getting those transactions happen right when the market opens. So I would suspect that some of the funds that own these three stocks that really got hit hard today might open lower and then might start to come back. And actually, now that I talk through this and think through this, I am going to wait. I'm going to wait until tomorrow morning at about probably 8:30 my time, Pacific time, because that would give the market 2 hours to be open, process all those trades. I want to see if it opens lower. I want to see if it then, after it settles down, starts to move back up. after the settling down, which happens after all of those trades from overnight get processed, then I will almost certainly put in a live stop just to protect us from anything further. Um, I hope that doesn't happen because this is so extreme and so exaggerated that I have to believe that that's not going to continue. If it were to continue, let's take a look at a couple other things. See this right here where we closed the volume POC or point of control. What that's telling me is that there was a lot of volume at this level. And being that it is so low, and this was the beginning of the uptrend, the most recent uptrend, it suggests to me that buyers are in here and may push the price back up. The second thing I am seeing is there's an area of support right down here, which is just above the 200-day moving average. So if it did go down, I could see a good deal of support happening here. So in my judgment, and that's all I can offer, in my judgment, what I'm going to do is let the market open tomorrow morning. I suspect there will be some downdraft early in the morning, but if it then starts to snap back up, I believe we'll be fine. If I continue to see weakness, I'm just going to suggest that we take our losses in those three stocks and move on until we can always go back into them. So it was a bad day. I'm not seeing, even with ANET, which was terrible, it's now sitting on the weekly chart at the bottom of its linear regression. So that's not terrible either. Here is a pretty strong break. I mean, that's very obvious, but let's see what happens in the morning. I'm watching this. I hate these huge losses, but it's huge losses in three stocks that we own. And most of our stocks were down a little bit, just a normal negative day. Bitcoin, actually, I don't even know why Bitcoin was affected here, but Bitcoin opened really low and now it went up. It actually it closed much higher than the low of the day. It went right down to the 20-day moving average and then sprang back up. So I'm not, even though it was down, I'm not seeing a lot of huge negativity for that. There are a lot of earnings coming out this week that address these big tech stocks. If those earnings come out strong this week, that too could propel these stocks back higher. So anyway, it was a very bad day. I'm going to end with that. All stops were skipped for everyone, and we're going to take a look at it early in the morning and try to make some intelligent decisions as to what to do. We're really looking at ANET, CLS, and NVIDIA. Those are the three stocks that I'm most concerned with, and then on a lesser basis, VIST, but I'm not as concerned about that. So that's what's happening. No, it was not a fun day, but I'm not seeing anything that suggests to me there's a disaster on the horizon. I just don't see it. So I just wanted to let you know about that. If you have any questions, I'm always here. Just shoot me an email and we can talk about it. But most importantly, I want to see what happens tomorrow morning after the open. The open is meaningless to me because that's when all of the mutual fund trades are going through. So there's always a big either downdraft or updraft for that first 15 to 20 minutes. Meaningless to me. I want to see what happens right after that. And I think that is the best strategy so that we make sound decisions, the best decisions we can. That's the story. Just want to give you a quick update. Thanks. Bye-bye.